So what's up, guys? We all just got our stimulus, $1,400 direct deposit. You already know what that means. It's a pandemic. So now the question bears, what are you gonna do with that money? So if you clicked on this video, I'm assuming you're trying to figure out how you can invest it, ways you can double, triple, even quadruple that money. So first and foremost, I don't want to encourage any irresponsible behavior. So if you do have any debt, bills, kids, pets you gotta take care of that first. And before you worry about investing or anything like that, use that stimulus money to take care of your responsibilities first. But assuming that you have taken care of those responsibilities, let's get right into it. I'll be telling you what you can invest in right now. So we're gonna be talking about two ETFs. And for those of you who don't know, an ETF is basically like this big fund that you invest in, and you're basically investing in like a batch of stocks. So instead of just buying like an individual name like Apple or Disney or anything like that, you are going to be buying into a big fund that owns a bunch of different names. Like, for example, the first one we're going to be talking about is the SPY. This is the S&P 500, and what you'd be investing in there would be the 500 biggest companies in the US, like Tesla, Disney, Apple, T-Mobile. It's one of the most successful ETFs in the history of the market. And the reason this is pretty straightforward, it's composed of the most successful, the largest companies in the world, really. In order to qualify for the S&P 500, you have to be well established. You have to, you don't only get into the S&P 500 when you go public. Like, you have to meet a certain criteria. To meet the criteria of the S&P 500 is you need a market cap of at least $10 billion. You need to be highly liquid, which means that you have a lot of cash available. You can't be heavily shorted, and you need to have 4 consecutive quarters where your earnings were positive. So 4 consecutive quarters where you made a profit, basically. And this is one of the main reasons why this index is so successful, because they're not just letting any high-risk company in here. You have to be proven. You have to have earnings, a good management team. A good management team is going to lead to high growth. And you need to have a value of over 10 billion. So let me just run some quick stats for you guys. So in the past 30 years, from 1991 to 2020, the S&P 500 came out positive in 22 of those 30 years. It resulted in a loss only in 7 of those 30 years. So in other words, the S&P 500 is winning 7 out of 10 years. It's having 3 bad years, but if you really look at it over the long term, you're going to end up winning with this index. And I think that's very important to take into account. So this is a great index to invest in. You're going to be getting bits of the best companies in the world. If you just started investing, if you're new to it, or let's say you already have some months of investing under your belt, this is still a great foundation for your portfolio. This is something that everybody should have in their portfolio because, yes, while buying individual names is a lot more exciting, the price movements move a lot quicker than with indexes. This is a relatively safe way to protect against losses. Like I said, they usually win 7 out of every 10 years. This is a great way to protect your money against inflation and just to guarantee you long-term success. So the next fund I want to get into is the ARK Innovation Fund. So this fund is a lot newer than the S&P 500. Like I said, that one has been around for not over 90 years. In contrast, the ARK Innovation Fund has only been around for 6 years. But in those 6 years, it's returned about 45%, which is more than double the market's performance. So in my opinion, the reason why ARK has outperformed the market by so much has to do with the fact on how it's managed. So it's managed by this lady named Cathie Wood, and the ARK Innovation Fund is actively managed. So what this means is that her and her team are making adjustments to their positions on a weekly, sometimes even daily basis. And the stocks that they focus on in this ETF are innovative companies, up-and-coming companies. So, for example, in their top 10 holdings, they have companies like Tesla, Square, which many of you guys are probably familiar with. Their app, Cash App, you probably all used that before. Roku, Zillow, you know, the housing website, Spotify, we all use that. Shopify, big in e-commerce, Zoom. Those are some of her biggest holdings. And as you know, these stocks have been flying over the past year. That's why in 2020, the ARK ETF returned over 100%. So why do I think that you guys should invest in the ARK ETF? Is it because I think it's going to return 100% this year? Not really, not. But I do think that it is managed in a way where if she sees opportunities elsewhere in a different industry, she's going to hop on that. So you don't really have to have exposure to individual risky names, because just by investing in the ARK Innovation Fund, you know, her and her team are already doing that for you. They are identifying opportunities in innovation, and they're giving you that exposure to growth, you know, high risk stocks, but they're taking calculated risk. So for example, a few weeks ago, the Nasdaq was in a correction. It dropped 10%. So if you look at their trades, they actually increased their positions in Tesla, in Square, in Spotify, while the market was down, so that when it picks back up, I don't know when it will pick back up, but when it picks back up, they will be able to increase their gains in these high growth, high risk names. So if we look at the 5-day chart in ARK, it was actually up about 8% on the week. Year to date, it's up about 1%. And in the past year, it is up over 250%. So, I mean, this fund has just been outperforming the market year after year, and especially in the last year, the growth has just accelerated. I will note that it's still about 20% off its all-time high. So even if you were to get in right now with your stimulus, I think you're getting it at a pretty good price. Like I said, you're getting a whole bunch of exposure when you invest in ARK. So I don't think you could go wrong with this fund, especially not if you are mixing it up with the S&P 500. Those are my two recommendations on, you know, well-diversified, low-risk funds that you can invest in, that you can invest your stimulus in. But overall, I think the most important thing is for you guys to invest in yourselves. You know, if you want to learn a new skill, whether that is investing, whether it's learning how to cook, to learn a new skill, you know, buy new books on how to invest. You know, there's tons of free resources on YouTube where you don't really have to go pay hundreds of dollars on a course on how to learn a new skill. You can literally do that for free on YouTube. So I hope that this helps. I really do. Investing takes a lot of patience, so it won't make you rich overnight. That's why I think that you guys should invest in these funds that have proven time after time to bring investors money. Like I said, the S&P 500 doesn't win every year, but over time it seems to win 7 out of every 10 years, which puts the odds in your favor. That's 70% of the time that it's winning. Thanks for watching. Don't forget to hit the like button and subscribe, especially if you found this video helpful. It really helps a lot with the algorithm. So I'll see you guys in my next video.